All right, then. The Nifty is quite weak this morning. In fact, we've seen a good 400-point cut just in the last 1 week. And yet, in fact, we are seeing some selling pressure, still holding on to that 8,000 mark. So that's a crucial level. So not a bad idea to bring in our market guest. We have Mr. Deepak Shenoy, the founder of Capital Mind.in. Hi, Mr. Shenoy. Thanks so much for joining in this morning. The Nifty now moving towards that 8,000 odd mark. Time to nibble in or still wait by the sidelines, and maybe 7,700 is the level that you'll be finding it attractive?
Hi Nigel, firstly thanks for having me on the show. The Nifty has actually changed into a broad downtrend. So we've had lower lows and lower highs. It went to 9,000, came back to 8,300, back up to 8,800, back down to 8,000, up to 8,400, back again at 8. So I expect if this downtrend is to continue, then our downside may be a little more than this. So given that, I think attractiveness from a technical perspective would not appear other than in a short-term bounce scenario. Having said that, a lot of valuations have changed now in terms of if you look at corporate earnings were really bad in the last quarter, including in some of the pharma plays that we have liked. So I believe that the next 2 months are going to be consolidating in terms of earnings, in terms of potential hits that our companies are going to take. So yes, nibble, but nibble selectively. I wouldn't buy the index at this point.
Okay. Deepak, hi, good to see you in today. The PSU Bank Index has been extremely worrying. It's now possibly one of the worst performing indices of this year already. And we're seeing, continued volatility in big names such as Punjab National Bank and Bank of Baroda as well. All of them trading sub 1 times price to book value on an FY16 basis at least. What is your sense in terms of the PSU banks? Would you just stay away from it because of the uncertainty that we're seeing, or maybe valuations look attractive at current levels, especially when you see it in context of, say, the SDR or strategic debt restructuring norms that came out from the RBI last evening?
Ekta, the strategic debt restructuring norms are interesting, but according to me, they're not a huge positive. A bankruptcy law would be a huge positive, but at this point, think about it. If banks were to take 51% stake and run companies or sell that stake to somebody else, they could do it in many of these default cases even without this SDR law. What the SDR law says is that you need a shareholders' approval before a debt restructuring can take place, and the shareholders will say that, listen, you can take this debt, and if these guys don't pay back or they don't do things on time, then the banks can then take over and own 51% of the equity, effectively diluting everybody else. What that means is that banks are interested in doing that, and I have my serious doubts about that, because if they were, a lot of the NPA cases like Deccan Chronicle or in some of the other cases that we've seen in the past, banks would have converted their loans to equity or converted even their pledged shares to equity and run the companies earlier. So I don't see that as a huge positive for banks. It's a negative in the sense that you can't restructure loans unless you have an approval from shareholders to do this. Now, will institutional shareholders do this? Will other lenders who are not banks do this? For instance, Religare owned a significant amount of the shares in Deccan Chronicle through the pledged mechanism. They were pledged those shares. Will those non-banking financial companies agree to all of this? It just delays the process of restructuring, which means banks will either have to take the hit and call these loans an NPA faster because they can't get approval, or if they do get approval also, it's not a huge positive because they're not in a position to take over these banks. Public sector more than private sector, because public sector banks are definitely not those that can actually run companies.
All right, Deepak, point well taken there. That's where the banking index, I think, is down close to around 3,500 points from the highs that we saw earlier this year. But let's shift focus and let's talk about a couple of these yesterday very good stocks. Something like a Tech Mahindra, big correction been seen on that particular counter, not looking too good. And from the broader markets, is looking at something like an OFSS. Now that stock is holding strong even in such a weak market. Any views on Tech Mahindra, OFSS, or the tech basket on the whole?
The tech basket, I think Tech Mahindra's results last time surprised us. We were, TCS at least had that one-time bonus to talk about, I think, which took their earnings down for 30% year on year. So Tech Mahindra's were down even higher, and that's what kind of surprised us. I guess that perhaps adds to a layer of weakness in these stocks. But overall, we're not so excited about the tech sector because for some reason their dollar earnings, not counting for dollar depreciation, is also under pressure. The only thing positive for them right now is the dollar depreciation, because that adds, it's been about a rupee and a half that might add in this quarter into their earnings. So apart from that, I don't find it very exciting. I do a wait and watch approach for at least another quarter.
Okay. Deepak, have you looked at these two stocks in particular, Ken as well as Vedanta, and the likely merger talks which are doing the rounds? Have you managed to have a look at the news maybe and what your thoughts would be?
Ekta, yes, I mean, we only glanced at them. There are only rumors and, there's only talk about it at this point. It would make sense because, Vedanta, I mean, they're both actually part of the Nifty. So, in a way, it's a little confusing about what will happen when they do this or if they do this. But overall, I think it's a good strategy because you'll get a larger single entity without the confusion of consolidated numbers, adding into both. But otherwise, I believe that the merger is just a strategic merger in terms of adding stuff. I don't know whether they would actually make sense to run as a single large organization, and Kane would actually have to have a separate set of operations and management compared to the rest of Sterlite / Vedanta. So I don't believe that the merger will be anything more than just consolidating the books.
All right, Deepak, point taken, but in fact, for Kane India, they are the ones that have all the cash in the books, so it's not too good news, I think, for those shareholders, given that the stock is reacting negatively to that piece of information. But let's talk about some other mid-cap stocks. Let's talk about something like a Batra. I think that one, in fact, has seen selling pressure. Today, it's hit a fresh 52-week lows. It's under pressure. What's your take on Batra?
Batra's, so it's fallen below 1,000 after a really long time. So in that context, I think a lot of people who were I remember speaking to a number of people who said if now Bata's run up above 1,000, I guess in that case it would be a stock to purchase. However, the consumer space itself has been impacted quite tremendously, and their other story, which is partially real estate, has also been affected, severely. So I don't see that the rich valuations that Bata has got in the past might have to sustain for the future. It's lost technical momentum. That's definitely the case. So in that context, I would play Bata only for a short-term bounce. I would do again a wait and watch for next quarter's results before taking a call. We weren't very impressed with the earlier quarter, so we'd wait for another quarter in terms of a fundamental call. But technically, yes, I mean there's chances of a bounce. It doesn't look like it right now, honestly, and it'll only make sense if the stock starts to bounce. It'll recover much of its losses.
Okay, Deepak, any disclosures you'd like to leave us with?
At this point, we do own one public sector bank and nothing else that I've discussed so far.
All right, Deepak, thanks very much for joining in and talking